have you with us today. Why don't you give us a brief background about you as well as BPH Capital?
Yeah, absolutely. Thank you for having me on, Anton. A little bit about me. I am based here in Dallas, Texas. I was born and raised here. I've been in the multifamily space on the acquisition side since about 2017. I started with a private equity group that was based out of Tampa, and I was just an acquisitions analyst. So I was underwriting deals all day long. It was a big shop. We owned about 14,000 units across multiple states in the South. And so it gave me a lot of exposure to deal flow, to underwriting, to financing, to equity partners, how to structure a deal, negotiate a deal. So it was really valuable experience for me at a young age. It was my very first position in the multifamily space. And so over about a year and a half time period, maybe even 2 years, I underwrote hundreds of millions of dollars of real estate deals. And then I was on the acquisition team that was a part of actually running the diligence and taking down these assets. Since that time, I've transitioned to BPH Capital, as you mentioned in the introduction. And BPH is based out of LA, out of Los Angeles, but I office out of Dallas and just kind of head up the acquisitions in the state of Texas and surrounding states. We're a little bit of a smaller group, very lean. So we all wear multiple hats, but we are slowly and surely kind of building our team. And we've added personnel this year, and we've got very aggressive growth targets to hit. So 2021 should be a pretty busy year for us.
Very good to hear. So just to give a little bit of a picture here from my experience of how I got to know you, I saw some of your underwritings of deals, right? Yes, you may not be in that market for that long, but I must say I was very impressed with your underwriting skills compared to what some of the other underwriting tools that we have seen, as well as the packages that were put together. So yes, you may not have been in the multifamily market for that long, but you definitely have built up your knowledge very quickly, right? So I think that's important for the audience to understand that you have jumped right in, and as you mentioned with the previous group you worked with, you have had the benefit of underwriting a massive amount of deals, and obviously with BPH Capital, you have been continuing to do so. So that's great. Now, I would say with BPH, I know that you recently sold a property here in Texas. And you did that just last year, at the end of last year. And as we all know, 2020 was essentially overshadowed for everyone with COVID-19. So it would be kind of interesting for our listeners to hear from you how you have been able to get through the year as property owners, and also how it all worked out with selling that property in an environment that obviously was challenging for everyone who is active in commercial real estate.
Yeah, absolutely. I appreciate the mention of my underwriting skills. That was nice of you to state, but yeah, fast forward to 2020, and it was a very interesting year, as it was for everybody else, because I mean, for us though, we were in the middle of both an acquisition and then getting ready, teeing up a disposition in Texas, as you mentioned. And I would say, fortunately for us, probably we sold that asset towards the end of the year, kind of when I think the shock factor of COVID had worn off a little bit, and groups were getting much more comfortable with the situation, more comfortable with what we're dealing with. Lenders were more comfortable with it, and so we experienced, really a pretty normal disposition process from my standpoint. Now you are always dealing with kind of the little COVID contingencies that go into the daily life that we live right now with lender financing contingencies and holdbacks and things like that. But we really haven't felt that it impacted the sale price of our asset at all. It was a very aggressive bidding process. Ultimately, it came down to a few groups. All of them were coming out of 1031 transactions and needed to place money. So I think that led to why it was such an aggressive bidding process, and really at the end of the day, why we got a price that we felt great about.
Yeah, very good. I think one obviously what is important even during that time as a seller is that you make sure that your collections stay up. So what did you do there to ensure that you didn't have a collection drop, and obviously that would have an impact on also on loan proceeds potentially if the NOI drops, right?
Yeah. Well, it was a couple of factors for us, in our opinion. First of all, the location of the asset, the market that it was in. So it was in El Paso, Texas. And El Paso really did well. It's a smaller, it's not as big as what you would imagine. It's not going to be a Dallas or San Antonio or Houston or Austin, but it's a very steady Eddie market, diversified local economy. So we did not have a big tenant base that was concentrated in any one field or company or anything like that. So that helped with the collections, as well as just the fact that we had really good property management. So we do not self-manage, we third party all of our property management. But the group that we have a relationship with has done a great job for us on that asset and all of our assets across the board in Texas. So that helped out tremendously.
Yeah, that's great to hear. Now, when we obviously here you were on the selling side, so with a great performance at the asset level, and working towards year end with multiple 1031 buyers that were bidding for the property, that was a perfect situation for you, undoubtedly. But overall, I would say from what we have seen, it was really 2020 was in multifamily, at least, was definitely a seller's market. And I would say that was also to your benefit. So my question for you is, since you're not only on the selling side, but also want to expand, how did you experience 2020 from a buyer perspective?
Yeah, so we came out of NMHC in Orlando this year. It's January every year. This year it was 2020. It was in January. So we came out hot. Everybody, all the brokers pushed their deals out. A lot of deal flow, a lot of touring, a lot of aggressive bidding, and then everything just kind of came to a screeching halt for a little while. When March came around and everybody kind of realized what we were dealing with. It was just kind of a standstill for a little while. I would say through the spring and even into the summer a little bit, because what you had was you had buyers that were expecting some kind of quote unquote COVID discount, but you had sellers who really weren't hurting yet or at all. Collections, especially in the Texas market, for the most part, held pretty steady all the way through. So you didn't see as much of the distressed play that we all maybe kind of thought that we would see at the beginning of the year. So it was kind of a standoff situation where you just had unrealistic expectations from the buyer side that there was going to be a discount there. And then I think once summer rolled around and people got on with life and kind of dealing with what we're dealing with, we realized that the market is great. It's a good time to still buy. It is a seller's market, but there are still deals to be done. And that's what we did as well. I mean, we acquired a 568 unit portfolio in Northeast Dallas, went under contract over the summer and closed on it in the fall. So we were still buying, and we realized that everybody else was still buying as well.
Yeah, very good. Did you see any particular challenges with that purchase due to COVID-19?
Yeah, absolutely. I mean, when we went under contract on that property, it was during a time when there was still a lot of uncertainty. So the way that we're structured is we have an internal discretionary fund that we use to JV with limited partners, right? So we're going out to a big stable of family offices, private equity groups, pension funds that we have relationships with. And at the time, a lot of those phones still weren't getting answered. People weren't in the office. Everybody in New York was in, the red zone, right? So everybody's working out of their apartment with their kids on their back. And, so voicemails went unreturned, emails went unreturned from some of our typical groups. So that was challenging. It was for a little while, but fortunately, we were able to find more than enough equity, and we have great partners on that deal. But so from the equity standpoint, it was challenging, and then also from the debt side, everybody's kind of dealing with the same P&I reserve that's just market standard right now. So that's something that we needed to account for.
Yeah, that's it's a very important point, right? So I think the advantage with that is that it adds you an additional cushion to it. The disadvantage is that the P&I sits with the lender, right? So that's kind of the negative part, I would say, that you don't have control over the money. But we always say, from a lending perspective, it's actually not a bad thing that you have to have that cushion in place. It's just a question of who has control over it. And obviously, as an owner, you never really want that something sits in escrow with a lender, right? So you touched a good point, right? So certainly March and April were pretty tough for everyone, and we also have seen buyers getting some discounts. But I would say the max that we probably saw of what was originally asked for was maybe 5% off that initial price. Whisper price or asking price, whatever you want to call it. So it was really just a brief period. And as soon as we entered into July and August, it reversed and it became the opposite. Right? So, so did you feel for that portfolio that you had to deal with other strong buying groups, or was it because you had have a longer track record and a stronger balance sheet with your own funds that helped you to still compete with them?
Oh yeah, no, it was absolutely a competitive process for sure. I mean, it was there was an original call for offer process, and then there was your traditional best and final process as well. And we were vetted very hard by both the brokerage group and the seller group. So we had to scratch and claw for that deal, and we had to exude the confidence in our abilities to close that transaction, because if it wasn't going to be us, and there were other very well qualified groups that were in line to buy those properties for sure.
Yeah. Okay, so I think that when it comes to being on the buying side, particularly in Texas, right, hard money, and when that hard money is due is always a big issue. It's only has been for a while over the last few years. I think in March and April, that was a period when hard money went away. I do not know how it worked with your deal that you completed, but where do you see in general, not specifically to that deal, but just in general, where you feel that hard money requirements are now compared to in 2019?
Yeah, I mean, I think it's right back on the table. I mean, we're kind of, we were doing a little bit of a happy dance. It was like the one silver lining of the COVID situation was hard money kind of went away for a while. People weren't that wasn't even a topic of discussion. But then very quickly, you mentioned, over the summer, things kind of reversed and heated back up, and I mean, everybody kind of slid right back into the normal flow of things, and so to be competitive on an offer in a major metro in Texas like a Dallas or an Austin or San Antonio or Houston, you're going to probably need hard money on your offer for sure. Sellers are going to want to see that, and if they don't see that on your offer, then they're probably going to move on towards offers that have that.
Yes, definitely. In DFW in particular, I would say Texas as a whole, but it's only DFW and Austin also now are on on the map for a lot of institutional players that have not been really interested in these two markets. San Antonio and Houston is probably less so. Maybe you have seen a little bit of a different picture there when you competed for deals, but it's only DFW and Austin, I would say, are definitely now clearly on the map for institutional players. And naturally, they are competing with you too then. Right?
Absolutely. Yeah. I mean, the secret is out if there was ever a secret on Dallas and Austin. I mean, it's, those are two of the hottest real estate markets in the country. So people are getting out of LA and New York is, ASAP. And we're seeing that flow of capital, and we've seen it for quite a while now. And, I don't know what would cause that to stop. So I would imagine, 2021 to be another year of increasing presence of groups like that.
Yeah, definitely. So looking into 2021, you mentioned that you have aggressive plans without giving any details, right, of your secret sauce. Can you give us a little bit of a picture what you think that is going to happen and how you can take advantage of it thanks to your experience and purchasing power and all that?
Yeah, absolutely. So I started with BPH back in what I guess it would have been 2019 now. So I've been here for almost 2 years in May. I believe it'll be 2 years in May. And in that time, we've acquired roughly right around 1,000 units just in Dallas, Fort Worth. And that was slow for our standards. I mean, it might seem like that's a good pace, but 2020 we had big plans, and the first kind of half of the year was a little bit shot, so we were able to finish off strong with that large acquisition. But 2021 we feel set up to really kind of put the pedal to the metal and expand in Dallas, and then other markets in Texas like Houston we're looking at all the time, San Antonio and Austin as well. We'll look at secondary markets in Texas as well. We'll go to Waco. We'll go to Abilene if it makes sense. Outside of Texas, we've got a deal lead who does what I do in Orlando, Florida, and he controls all of Florida and up into the East Coast a little bit. So we'd love to crack into the Carolinas. And then we also have another acquisitions director out of Atlanta. So we'll continue to build. We'll continue to build in Georgia as well.
Very good. So when you talk to your colleagues and kind of sharing information with each other, how would you see that these three main markets compare in terms of deal flow as well as opportunities to actually find a deal that potentially could work for you?
Deal flow in all three markets is very strong. It's pretty constant. Orlando was a little bit, it slowed up in Florida for the most part in 2020, just given it's a tourist destination like Orlando, so Florida slowed down a little bit. Dallas is going to be Dallas as always. There's going to be, constant deal flow. And, in our conversations, the Atlanta area seems to be no different for sure.
Yeah. Okay, very good. So you don't really see any big difference there, right?
No, we didn't have NMHC this year in January, or we're not going to. So I don't know that we're going to just see a big, floodgate of deal flow like you typically see at the beginning of every year. I think it's just going to kind of be a slow and steady trickle, at least from what I'm feeling and seeing right now. But that doesn't mean that there's not more than enough to keep you busy. That's for sure.
Yeah. Okay. Very good. So I know that you're on the acquisition side, but I'm still a little bit wondering how BPH is approaching the expiring, hopefully soon expiring eviction moratoriums and all that, and how you foresee that will impact the multifamily space as we move into the end of this quarter and then into the next quarter.
Yeah, well, fortunately for us, our headquarters is out of California, but we don't own property there. So I've heard some pretty tough circumstances out that way. But in Texas, we're still able to evict. There's a process that you go through. It's a little bit more extended, but it's still in process. But we try very hard to be understanding of the situation. And if tenants are willing to work with us, we'll put them on a promise to pay program and try to avoid evictions at all costs in a time like this. But it's certainly something that we keep an eye on at all times. It's a topic of conversation constantly, but fortunately we feel like we're in states and locations that are favorable for it.
Yeah, that's a very good point, right? We hear horror stories, obviously, from California. We hear them from New York, right? We hear them from Chicago. So all these big urban centers, dense urban centers appear to be the toughest, right? And you obviously have picked 3 states that are a combination of landlord friendliness, but also very, very much growing states, right? So you definitely have picked the right markets there. So that's, I would say, you set yourself up for a very good future, whether it's for 2021 or then going forward. So do you have anything else that you would like to share with our listeners? Well, what do you think would be of value of what you have learned over the last year with BPH, as well as just through your acquisition processes?
Yeah. I think one thing that was kind of a little bit of an epiphany for me personally, and just our group in general, in 2020 was we saw a lot of groups, and we talked to a lot of groups that were buying deals, and they said, we weren't initially maybe awarded the deal, or we weren't the top bidder, right? But we made an offer. And we presented it with confidence, and we stayed in communication. And we're seeing now that sometimes deals are falling out of contract, or maybe not getting quite to the contract period after they're awarded to somebody. And if you had a strong offer at the start, but maybe you weren't the strongest offer, and you've stayed in communication with that brokerage group, and you've really followed the situation, we're seeing deals come back to people. So one of our initiatives is just going to be more active in a bidding process, on more assets, as opposed to focusing on just 1 or 2 at a time, maybe that we really, really like and we're going to go really hard at. Just because we're starting to see groups, come down with deals that maybe was just a process of kind of following up with it post bidding.
That's a very good point. But we certainly have seen that too. There are many deals that fall through, and some of them do not really fall through because of collections dropped or anything else. It's more driven by the sponsors that somehow are not able to raise the equity or have other issues. So it's a very good advice, right? Particularly for the ones that are experienced operators like you. That keeping in touch with the brokers, even though you initially lost that deal, is very important. You never know what's coming back, and we have seen that with a number of our clients that has happened over the last 12 months. So, and it certainly has happened much more often than before. So that's a very good point you brought up here. Yeah.
Absolutely.
Yeah. Very good. So I really appreciate your time, Hunter. How can people reach you to discuss with you potential deals, partner up with you?
Absolutely. Yeah. You can find me on Facebook, Instagram, just my first and last name. And I'll also give out my email address. It's hunter@bphcap.com.
Okay. Very good. Great. Thanks again, Hunter, for joining us. You added great value here, and again, for everyone who is active in the multifamily space, I think it's definitely worthwhile for you if you look for a partner or have an asset to sell. Reach out to Hunter. Thanks again for joining us, Hunter.
Absolutely, Anton. Thanks for having me on. Look forward to seeing you again.
Yeah, same here.
All righty. Bye-bye.